I was driving through town today after dropping my daughter at the bus and going to my favorite coffee shop, which, by the way, this coffee shop, I'm usually like one of the first customers in there because I get to the bus stop like basically right when the coffee shop opens. And I have a favorite barista, Leela, and we walk in and she's playing 1990s Japanese alt rock, which kind of sounds like 1980s British alt rock.
I
But
don't
she's
even
like,
know what
"Have
alt
you
rock is or what Japanese rock would be. Isn't it just rock?
kind of?"
What's alt about it?
I guess it was kind of more like new agey, like The Cure, for example, would have been kind of
Okay.
like the early alt new age stuff. Anyways, so she's like, "Have you heard of this website called Every Noise?" Or no, she called it Every Sound, but it's actually called Every Noise. It's called Every Noise at Once. And if you go to this
Okay.
website, it has every type of music genre, like globally. So if you go in, it might say like Cantonese alt rock or Northern London indie music or like just like all these different genres. And if you like, it has that kind of like a floating word list. And if you click on any of them, it starts playing automatically that genre.
So it's like an AI thing that will generate a
Yeah.
song based off of the selections you choose.
No, it's actually, I think it's playing real music. It's not generating anything. It's just like tapping into kind of like an always going radio station. So it's like a Sirius XM, right? But with all these like worldly genres. It's
I
crazy.
actually saw an AI thing where it was similar, but you could take a song, then you could select a year, then you can select like a genre or something like that. So you could take like, I don't know, Jingle All the Way and then select heavy metal and then select like the 80s. And it would
Mm.
mix it all together from like all those things and create a new song. And it's kind of cool. It was fun. I was
It
playing around
is.
with it for a while.
It is kind of cool. Actually, you're the perfect person to ask this because you're not going to bring any like music snobbery to this situation. Jess and I were walking around Portland for her birthday, and we went into our like favorite. It's like a souvenir gift shop. I forget what it's called, but it's in the old port, and it's always got like really cool like local Maine artist merch. And so we go in, and they have always loud music playing, and it's kind of like 70s funk covers of like classic metal songs.
Okay.
And I'm like, this sounds really cool. Or not even always. Like they also had like Killing in the Name of by Rage Against the Machine was
Yeah.
like being covered. And I'm like, wow, what is this stuff? So of course I Shazam it because I'm like,
Right.
want this in
You
my
want to
music
know.
library. Yeah, this sounds awesome. This is really a good jam. And so I Shazam it and I find the artist and I find a bunch of different artists, like songs by the same artist. And then like looking at the covers, and then I look at the artist's name, and the artist's name is Fake Music. I'm like, oh no, I got suckered into an AI cover of a classic song played into a specific genre, just like you were talking about. And so I immediately started feeling conflicted. Like, is this okay? Like, can I listen to this? It's not art anymore. Is it okay to listen to enjoy this? Or am I just being played by the machines and part of the problem? And I
Well,
don't feel like
the
you're going to bring that to this context.
I feel like copyright infringement is probably a thing at some point, but I mean, maybe if you change it enough, then it's technically not what it is. It's just like how Chinese people make knockoff things all the time. There's like knockoff Oakleys and Ray-Bans and cars now and knockoff Louis Vuitton, like all of that stuff. But it's like
Yeah.
technically spelled a little bit different or like whatever it might be. So it's not the same. That's
Mm.
what this is. But I mean, I guess there's always been mashups, but they've just been created by people. So this is
But usually
basically just a
the
mashup created by a computer.
But the mashups usually are using the actual audio, like from the original song.
It
DJs
is.
will like play one thing over the other. This is like creating a new song and pretending it's an artist. This is on Apple Music, by the way. So it's not like
Oh, it
I'm,
is.
pirate radio. Yeah.
Okay, yeah, that's a little odd that it's on Apple Music, but
Yeah.
I don't know. I mean, it
So,
was good enough where you Shazammed it, so clearly there's a market for it.
right. So I enjoyed it. Right. I was having fun with it. It does not bother you in the least, I imagine, to
It
listen to this
bothers me
music.
in the sense that, like, Well, actually, I don't know. Like if I created a song that was like an absolute jam and it took off, but then like AI or something mashed it up and it took off way more and I received no credit for it, like that would suck.
Yeah. Yeah.
Like it's just like if
Credit.
someone took our podcast and like AI came in and edited it and made us even better looking and more funny and like different points, and then we got 10 million hits on it, but then our podcast only got 1,000. That would kind of suck.
Interesting. Yeah. Although, would it? I don't know. I mean, then there'd be like a
If we
more
got no credit
popular.
for it,
Do I need credit, or is it like whatever we say is the important thing, and whether I get credit for it doesn't really matter?
fair, but what if it changed the way you said it?
I'm gonna think about this. I'm gonna make sure I credit everybody as I go through things today, and just say, "Hey, here's what I got. This. I'm not stealing from anybody."
I
You know.
don't know what the right answer is. I guess everybody's going to look at it differently. Like, it doesn't bother me per se, but I can see how someone else would be bothered by it
Yeah. Yeah. That's fair.
personally.
Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth, from financial growth to career growth, personal development to societal progress. We explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers, it's about understanding the world and our place in it. The information in this material is for general information only and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage advice or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. All right, well, let's give plenty of credit right now as we recap what just happened in January 2026. I've got a bunch of stuff to go through, Colin. Anything on your mind though before we dive in? What have you been thinking
Well,
about so
I
far
think
this year?
today we should talk about kind of like a market shift. Obviously, everybody kind of talks about like the big name stocks, you know, the Teslas, the Amazons, the Microsofts. But what we're seeing currently kind of kick off the year is really kind of like an evening of the boat, if you will. You know, we've seen small cap come back. We had a great year in international last year. EM's looking good. To me, I think that that's kind of like the shift. We saw a lot of tax loss harvesting coming into the new year. There's been a lot of good changes to kick off the year, and it'll be interesting to see where it holds. But we're certainly kind of seeing like a bit of a rotation in themes. And I think that that would probably be the best place to start personally.
Yeah, so it's interesting. You were talking about this, I think, yesterday. Everything's like at all-time highs right now, and it feels like we aren't going anywhere. I feel like we're treading in water, right? But like we're not swimming forward. And you were like, well, maybe this will be like last year, where we have some sort of pullback earlier in the year, and then we're off to the races again. And I think that definitely could be the case. I remember maybe it was around this time last year, but earlier in the year, you saw the value stocks outperforming. The Dow was the best U.S. index, and that's what we're seeing again this year. But at the same time, still the S&P is at all time highs again, right? Like it's
Right.
we're not going down, we're just kind of not going forward.
Well, I think the thing is people like hear these headlines and they're like, oh, you know, small cap and EM and all these different places are the place to be. That doesn't mean that large cap still hasn't done really well. You know, like at the end of the day, you know, like all stocks have done great. You haven't really missed that much, to be honest. Certainly, there are some areas that are performing better than others. And like you said, you know, last year value did really well in the beginning of the year. We're seeing a similar situation this year. I think, you know, you're seeing these different sectors play catch up to kind of the rally that we had last year in large cap. And it'll be interesting to see if it takes hold. I mean, look, historically speaking, international's really lagged behind. You know, the joke we always talk about on these podcasts is international's always been on sale. And Now it's finally starting to do okay. And it's the same thing with, small caps lagged behind for a few years now too. So who knows what's going to end up happening, but we are certainly starting to see a shift at the beginning of the year now.
What we're looking at on the screen for the listeners at home, we're looking at the S&P 500 index versus the S&P 500 consumer staples, right? So the S&P 500 all-time highs, as we were just saying before, everything looks really good, but sometimes we have to look underneath the hood and figure out what's happening inside the engine. And even though this car is moving forward, we're seeing some material breakdown underneath. What I mean by that is consumer staples are like the conservative large cap US stocks that everybody goes to, and they buy them regardless of whether it's a good market or a bad market. Everybody needs toilet paper, right? Everybody needs their Fritos or whatever it is. So you see a lot of, buying these stocks for looking for dividends, looking for stability, quote unquote. Right now, you're seeing those stocks, to your point, Colin, outperform the index overall. And when you look at that, and you look at kind of like the breakdown of the index compared to just that sector, that tends to lead to a little bit of a bigger drawdown. And not whenever like talking financial crisis, whenever we're talking about a drawdown, we're talking about just that, like a decline in prices, not a crisis or a chaos or even a like prolonged bear market. We had this last year, right? We had
We
this in
did.
2025. We had this in 2024. 2024 was a bigger bear market than we've seen in a long time. But this type of situation, came ahead of, or at, I guess, the very beginning of that prolonged pullback in 2024.
Yeah, I mean, record highs doesn't necessarily mean smooth sailing. We've seen some volatility come back. If you look at the latter half of last year, the last month or two here, we had geopolitics kind of come back into the conversation as long as policy changes and things like that. We're talking about buying Greenland here. And then on top of that, after a strong Q4, investors were reminded that markets don't move in straight lines at this point. So, to your point, there's a lot of things that are going on under the hood that kind of make it seem like while we are at all-time highs, we're in a bit of a lull. And I wouldn't be surprised if we continue to see this lull as these conversations continue. We had such a year last year, and it finished so high that ultimately, like, I wouldn't be surprised if we continue to see this on trend for the next quarter, and it'll be interesting to see how things shake out.
Well, I think what's interesting over the last maybe 13 months and maybe a little bit longer than that is we're starting to see the value of diversification again. And not too long ago, you and I were talking about how we should be US only, right? Because that's what our
Right.
clients measure us against. How am I doing against the market? And for a long time, it was very safe to just do that. Bonds were dead money. International stocks were a loser's game. Commodities weren't doing well. It was just like US stocks, specifically large cap US stocks. And then at various times, just like speculative US stocks. Those were all great places to be. And now over the last couple of years, you're starting to see diversification play out again, which is really great. I've got another chart I'm going to share.
While you're getting that pulled up, we had an interesting conversation with a wholesaler that I thought brought up a really good point recently, which is over the last five, you could even say 6 years. Basically, your performance came down to how much weight you had in the top seven largest stocks in the S&P 500. That is really what drove the market is tech. And you could look at a fund performance and say, this fund performed amazing and this one didn't perform as well. And when you look under the hood, almost every single time it came down to how much they had in the Mag 7 or how much they didn't have in the Mag 7. And that's what's really driven the performance. Over the last quarter or two here, we might not have seen that, or I'll say over the last few months, we haven't seen that as much. Things are starting to even out more, but that doesn't necessarily mean that that's going to be the trajectory moving forward.
All right. Well, the only thing driving the performance before might have been just concentration in the Mag 7, and now driving portfolio performance is actual portfolio diversification. And we buried the lead because we're, 10, 15 minutes into this conversation today, and we haven't talked about silver, which is the most exciting thing that has happened since gold.
If we were to rewind the clock and someone was to tell me that silver would be at the top of our investing conversations coming into 2026, I would have been like, "Why? That's stupid."
Yeah. Yeah, I know. So on our screen, the latest chart, we're looking at silver versus gold this year. This year is not even 1 month, right? We're at the end of January. We haven't exactly put January in the bag yet, and silver is up 58% in a month. Gold's up 20%. It's no slouch, but what we see in commodity bull markets like we're in right now is we see gold make a run, and then we see silver kind of like get to a more extreme version of that run, and then on the other side go down in a more extreme way. I am very happy, Colin, that you and I worked gold into our portfolios early last year. I'm even happier that we're not involved in silver because I feel like when you get a parabolic move like this, that's not a you can't have a prolonged run with it. It's not a stock with an investment just skyrocketing like this. This is mooning, right? This is everything going to the moon. Nothing ever stays on the moon. Have you ever noticed that?
No.
We don't just like moon and then things are like great. It's moon and then we crash back to Earth.
Yeah, I mean, I hate to call this a bubble, and I don't want to throw
No,
that
we're not
term
going to
out
call it a
there
bubble.
just yet. We're not going
Don't
to
do that,
call it a
Colin.
bubble, but there are a lot of a lot of similarities between this and like tulip mania. You know, you have a commodity that basically serves no purpose whatsoever. There's no utility to it. It's not used in chip manufacturing, it's not used in production in any way, shape, or form. It is literally just a pure commodity that is driven up by people chasing the price of it. And it's the same thing with tulips. Now, if you go back to the 1800s, people were driving up the price of tulips and everyone wanted them because the price was being driven up like crazy. People wanted to participate. Then all of a sudden, the market fell out from the bottom and they were worth absolutely nothing. I'm not saying that that's what's going to happen with silver. But when you're chasing something that has basically zero utility and the only thing that's driving it up is price action, that to me is a red flag.
I think I'll push back a little bit and say that silver it does have utility. Like tulips were kind of like art, right? Like it was basically like we really
Sure.
value these or beanie babies. Like we really there's a value to this, but there's no utility to your point, right? And I think the price action that we're seeing in silver reflects that type of behavior, even though underneath it there is some utility. Like silver is used in EVs, silver is used in solar, silver is used in AI industrial build out. That's what I think got people really excited. They saw gold and they saw that the precious metals was maybe a good temporary investment. Then they looked for a narrative underneath it. And the narrative was, wow, we need all this silver to build out for AI in the future, et cetera. And that's true to a degree. But that doesn't mean that we need silver to be up 250% over the last 1 year. And I
Yeah,
think
and I
that's
mean,
where the disconnect is.
yeah, and I mean, like, I appreciate that it's used in like conductive ways and things like that, and bonding and whatever it might be. But like, it's such a small amount. Like that silver is used in these types of things. It's not like copper transistors or things like that. So I guess to me, like the hype around it and the price action doesn't reflect the amount of demand and use cases that it's currently being called for. Maybe I'm wrong. Maybe silver is going to be like the next big thing, and people are going to start adopting it more and putting it in more places and using it. I don't know why you'd start doing that now since it's gotten so expensive, but I don't know. Yeah,
Yeah.
it would have been good
That's
to
the
do that
thing
2
is
years
that
ago.
like, yeah, like if we need all this silver and then like, part of the let's play it out. Play out the thesis. We need all the silver for the AI build out. The AI build out is already absurdly expensive. All these companies have to at some point justify the money that they're spending on building this all out. At some point, is there a ceiling or a limit to that? Like if all of a sudden they're paying, 5 times for the silver that they were before, is that a good thing? Are you winning that by owning silver, or are you just going to see demand dry up?
Well, 100%. Like there has to be a price point that demand falls off. Like you can only go so high in your price point before people stop wanting it. Like if ground beef became $50 a pound, I'm going to switch to pork or even tofu or whatever it might be. There's a price point where people don't want to pay it anymore. And I don't know what that price point is with silver or how necessary it is or how many substitutes you can find for it. But at the end of the day, like, it's going to get to a point where it's so expensive, it's gonna get phased out.
You know, I just realized that I forgot to credit anybody. We kicked off this conversation about giving credit, and I forgot to say that first chart came from JC at All Star Charts. So mea
The
culpa.
rest of it is all our thoughts.
The rest of it is all uniquely ours. And actually, I'm going to add on and say I borrowed some thoughts from Tom Lee recently. And Tom Lee has a reputation for being very bullish in general. Some people have accused him of being a perma bull. He does not sound very bullish right now in the short term. So Tom Lee, he's the head researcher at Fundstrat. He has done very well for the last 15 years and kind of having the right call. His call right now is that he sees some short-term volatility ahead. You may have heard some friends of ours, some people we know talking about how the market always tests the new Fed chair. And that's part of Tom Lee's thesis as well. I think that's something that's going around. We're going to see a new Fed chair in 2026. And, you know, historically speaking, I suppose the market doesn't do well around that period. So that's one reason that we might see some hesitation. We also are reassessing the AI narrative still, which is kind of funny because this bubble has not played out to be a bubble. And we're also looking at in-cycle corrections, right? It's if you're talking to Tom Lee, he's like, wait a second, I'm still bullish. It's just that I'm not bullish right now. You can't go straight up forever. We have to have some sort of pullback. And he's predicting that we'll have like a 10 to 20% correction at some point in the first half of this year. And to your point that you made to me yesterday, yeah, so what? We did that last year too. And then we had an epic year.
Yeah. I mean, just to have some volatility doesn't mean that it's going to be like an abysmal year or we're going to blow up by any means. You know, we talk about this constantly. The average drawdown in any given year, I believe, is 14%. So to have some volatility where the market has a bit of a reset wouldn't even be a bad thing, nor would it be unexpected at this point. I think at this point, you know, we're starting to see some more headwinds come into play. You know, valuations were driven up huge last year. To your point, the AI narrative is still kind of the main talking point, apart from silver, of course. And when you look at all of those things, you know, certainly I would say that there's probably a pretty strong case for some volatility coming up. Whether or not we see it is another thing, but it's pretty unlikely that we're going to see the market just continue to chug up in a straight line that I think some people have expected. And a bit of a pullback, certainly around the Fed chair. I know the Fed has been pretty data driven so far. It'll be interesting to see what the new guy says coming in. But it's going to be a time, probably Q1, where we're going to see some volatility.
Yeah, Q1 or Q2. And I think part of Tom Lee's thought there is that in addition to just having a new Fed chair, you know, what does that Fed chair say on behalf of the current administration? And how much of an impact does that have on the markets? You know, I think we're seeing more and more interference. You know, we started to see that with commentary on healthcare last year. This year, the president's been talking about stamping down on credit card interest rates, and you saw a pretty aggressive decline in price for those companies. And now you have financials struggling to start the year. This is something that historically we've seen from the first administration and now the second. It's just, you know, I have thoughts. I'm going to share my thoughts, and then there might be consequences. This time around, it feels like those consequences are a little bit more real, even if they're just temporary.
Yeah, I mean, I think additionally to expand on that, we're going to see like trade and global tensions probably continue to rise. That seems to be an ongoing theme. I'm sure at this point, the market probably expects it between like everything that's going on with Greenland, tensions with Europe, tensions with Canada, things like that. They're not exactly strengthening at the moment as well. So to kind of I guess elaborate, there's a lot of signs and a lot of things that are out there, whether it's the new chair, geopolitics, you know, AI, like all of that stuff is going to play a pretty crucial role in terms of how the next few months shape up and what the markets actually look like. And ultimately what the new Fed chair does coming in and how he reacts to, you know, the data that's being provided to him and the data that they're even sourcing and where that's coming from and what that actually looks like is a whole nother conversation to crack open. But it's gonna
Yeah.
be it's gonna be
Volatility is the price of long-term compounding, Colin, right? So, we just want to make sure that we're positioned in a way in which we expect these types of temporary declines and that we don't make any bad decisions around those times. Speaking of Tom Lee, his company, Bitmine, just put a $200 million investment into Mr. Beast Industries or Beast Industries.
Really?
I think that's really interesting. You're a YouTube aficionado, like all the YouTube inner workings. We talk about Mr. Beast a lot. What are your thoughts on Beast Industries? What is Beast Industries? Is Mr. Beast himself an industry?
Honestly, yes. That guy is unbelievable. Have you seen MrBeast games on Amazon Prime?
Saw one episode.
Okay. Well,
No,
there's
I
a
didn't even see the
season.
episode. I saw the behind the scenes thing that you showed me.
The MrBeast games, which keep in mind that this guy just started doing YouTube videos at age, 14 or whatever it was, with his I'll say show on Amazon. Like, it's not really my cup of tea, and I don't even follow MrBeast, but he's the most followed person globally across social media. He set 44 Guinness World Records during filming the MrBeast games. 44. He had the largest prize fund award for a competitive reality TV show, $10 million, dollars, the largest cash prize set on any show of $5 million, most expensive season of a competitive reality TV show with $100 million of his was a production budget. Most money won in a single episode was 2,020,000. Most participants in a single competitive reality show of 2,000 people. Then there were a million other ones. Most cameras recording simultaneously on a competitive TV show. Do you know how many
Okay. All
cameras he
right.
had?
No,
How
I
many
don't.
cameras
I
did he
don't.
have?
I don't know. I don't know, Colin. Tell me how many cameras he had.
1,117 cameras.
Those
The
are not cheap
purpose of all of
cameras.
this, yeah, the purpose of all of this, and then if you watch it, pretty much anybody who's anybody, like any major, like Christian or Ronaldo, what am I trying to think of? The soccer
Yeah,
player,
Cristiano
Cristiano
Ronaldo.
Ronaldo is on there. I think Tom Brady's on there. Like any major athlete, any major influencer is a part of these games. Like he is a machine. He is an industry, and he's worth over $1 billion now, from what I understand, when you add up the value of his companies and everything. So I
Yeah.
think social media and just media in general is just going to continue to be such a massive industry. And what I'm excited about or thinking about as we talk through this is if there's ever going to be an IPO of a YouTube based media company
Well, I think that's kind
like
of
MrBeast Games and where that's going. Because,
well, no, it's not Mr. Beast Games. So Beast Industries
sorry, Beast Industries.
is Beast Industries is a there are investors. That's like it's not just Mr. Beast anymore. Like Chamath and Social Capital, for example, own a piece of Beast Industries.
Right.
Obviously Tom Lee and Bitmine now own a piece of Beast Industries. And, this is personal brand at hyperscale. I think Ronaldo is actually one of maybe the only people who's bigger globally than Mr. Beast. But that's like we are now at a point where like how much that what this guy has done has taken those YouTube videos that he started and made just a total like global dominion. And that is really interesting. And now people are tapping into that. You've seen, I think he has like candies or cereals or whatever. He does something about food.
Chocolate.
I don't know. Yeah, chocolate. There you go. Like he's
Yeah.
branching out
Because like
as
30,
everybody does.
yeah, I think, well, the reason was that it was actually pretty interesting was because when he was doing a show or something like that in some foreign country, they were doing the tours of chocolate fields, and then they realized like over half or around half of all chocolate comes from slave labor. So the chocolate that you buy in stores and is manufactured by a lot of these companies come from slave labor. So he basically created a chocolate company that didn't have slave labor. Basically build up this industry, and his infrastructure is just unbelievable. And you're seeing the same thing too with podcasts now, and other YouTube channels have taken on huge, I'll say, investors and taken on, capital and all different kinds of things. And it'll be interesting to see how private equity comes into this, and if there is, a publicly traded option for some of these companies and what's going to come to market. It's a brave new world. I mean, who would have thought that a YouTube channel could have been this successful?
Well, Tom Lee seems to think that Beast Industries will equal Beast Financial Services. And that's not, he's not like the first person that came up with that idea. And I think this is what Elon Musk was trying to do with X. Like he wanted it to be the everything app. And now I think it's, at the very least, it's some sort of very kind of like half dead social media and AI. And the Grok AI is one of the bigger AI options out there, but still like I don't know, fourth or fifth place. Uh, Beast Financial Services. So one of the things that Tom said that I thought was really interesting. I was listening to him talk. I think it was a Wilmer Frost podcast, and he was talking about the idea of Mr. Beast as essentially like a force for good, right? To your point, when
Yep.
it comes to the chocolate. And I think he's known for making a lot of donations, et cetera. But he was looking at Mr. Beast and his reach as an opportunity to improve financial literacy, right? Like if you have 1 billion followers and you can start to teach them about finances in the right way. Like if we had 1 billion followers and we had something very helpful to say, I think that would be a pretty good outcome. Maybe Mr. Beast is the person to do that. The question is, what type of financial literacy is he going to be teaching? Because, Tom and his company are a crypto blockchain company. Is that the future of finance? Or are we like finally past this point where crypto is an alternative and it's becoming more and more mainstream? Or are we going to be back to like the 2022 time when all of these celebrities were pumping crypto and then pulled into court and fined for it?
I think the future of finance is wherever the money goes. And ultimately, there's going to be a huge money shift, like we talked about, when our parents' generation pass away, and then money passes on to younger generations. And ultimately, a huge percentage of the world is watching these videos. And if what you're being fed is crypto, and what you're being fed is, maybe I'll say more selective stock selection or whatever it might be. Like whatever you're being pumped on the media is most likely where the money's going to go. And Tom Lee's like very smart to think that way, because ultimately someone could invest in the company and really have control over a huge chunk of the market by having influence.
Yeah. I think betting on Mr. Beast is probably at this juncture a pretty sound bet. And people are finding ways to invest in process and progress like that. And if Mr. Beast is how old is this guy? Like 30? Like he's
I don't
fairly
even know
young,
if
I
he's
think.
30.
He might not
Yeah.
even be 30. He's not Gen Alpha, but he's very popular with Gen Alpha and every generation between that and whatever generation, sub micro generation I am. And I think that that's a lot of reach. And it's going to be very interesting to watch and see what Beast Industries kind of evolves into and if that's going to impact what we do on a daily basis.
I think it will. I mean, inevitably, there's going to be a shift. And, we talk about this too. Like, it's not exactly as if, the shift is going to be overnight. It's going to be many, many years of this shift. It's not going to be a switch where, like, a whole generation passes away, all the money shifts, and then that entire, generation just decides to go all in on crypto or some new, financial system that hasn't even been built out yet. But there will probably be some sort of shift long term inevitably when you have one generation that has certain ideas about money management and the money moves down to another generation that has been influenced in a different way. We talk about this, like the people who were born and lived through the Great Depression managed money very differently than the people who were born in the 80s and lived through the booms. So it really is just a matter of perspective on what's going to happen moving forward in the future.
Yeah. Okay. Well, that was all the news that fits, as they used to say on MTV back in the days. Anything before we sign off, Colin?
No, I think it's good. I think just in closing, we're expecting some volatility coming up, and we've already seen a little bit. It'll be interesting to see how things shake up. We have a new Fed chair coming in here in a few months in March. We've got all kinds of interesting things in the works in terms of geopolitics and, trade and blah, 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 blah. AI is still at the top of the game, but we'll see, silver's still at the peak next market recap, and we'll see where AI kind of stands. But yeah, let's see what happens.
calling a decline. I think by the next time we record this, silver's lower than where it is. I said it.
I don't disagree.
All right,
But that's not investing advice.
No, it is not. It is not. Never investing
Yeah.
advice.
Yes.
Thanks, Colin.
All right, thanks. Bye.
Compound Growth with Wheeler and Colin. Sponsored by Ko-Fi Advisors. Reach out today. Yay!